Good morning, everyone. My name is Daniel Ptacek, and I'm a junior in the AIM program covering domestic and international utilities. I'd like to start off by thanking everyone for tuning into my pitch and get right into it. Ormat Technologies is a vertically integrated geothermal equipment, services, and power provider. They design, develop, manufacture, and sell the equipment used in their plants and others for electricity generation and related purposes. As you can see, 67.6% of their 2017 revenue is derived from the electricity segment, which sells the generated electricity to utility providers under long-term power purchase agreements. The other 32.4% was derived from their product segment, which builds, designs, and sells this equipment. Geographically, 50% of their 2017 revenue came from the Americas, 35% from Africa and the Middle East, 11.6% from Asia and the Pacific, and 3.3% from Europe. While screening for a company, I was looking to further diversify our utility holdings. Ormat Technologies' unique position as one of very few publicly traded geothermal companies allows us exposure to a different type of energy production. Furthermore, as we've seen volatile markets as of late and fears of an economic slowdown grow, I was looking for the safety of a utility stock with a low beta. Ormat Technologies' unique geographic spread, diverse revenue streams, and clearly outlined plans for expansion were all factors that caught my eye. Additionally, two events took place in 2018 that caused Ormat's price per share to drop. An announcement of a reversal of a $44.7 million tax credit, and the eruption of a volcano in Hawaii that closed the Puno geothermal plant. The markets have reacted to both, and I believe that they've created a situation to buy low. Now you might be wondering what geothermal energy is. Hydrogeothermal energy is produced by extracting water that is heated underground or using this heat generated underground to heat water to around 300 degrees Fahrenheit. Then, separating the steam and using it to spin a turbine, a generator is activated, producing the energy. The water is cooled and then re-injected into thermal pools, leaving little to no emissions. Geothermal energy production offers a number of advantages over other renewable energy sources. It produces little to no CO2 emissions, it disturbs fractions of the amount of land that other renewable sources do, and it can operate in virtually any climate during any season of the year. The global geothermal market is expected to hit 23 gigawatts by 2023. This would represent around 10,000 megawatts of added capacity over 2017 levels. Additionally, Ormat Technology is well positioned to fill a void in a number of emerging markets across Africa, the Middle East, and Asia that are expected to boom in the coming years in geothermal demand. And now to discuss a couple of the drivers behind Ormat Technology. The first is expanding capacity. The firm's plan to increase capacity to roughly 1,000 megawatts by 2020 would represent an additional 1 million megawatt hours annually over 2018 levels. If these plans are achieved, even using a conservative average price estimate of $85.20 per megawatt hour, it would imply revenue growth of $90 million, an increase of 17.2% from 2018's estimated revenue in the electricity segment alone. The second driver would be improving margins. The Puno plant's closure in Hawaii was a major cause of the roughly 9% or $11 million decrease in overall gross margin in the third quarter of 2018 versus the third quarter of 2017, as well as some one-off pump failures hitting in that same quarter. However, management reiterated their guidance for a strong fourth quarter and overall gross margins hitting between 45 and 50% by 2023, which would be a 6% increase from 2018 levels. This would be driven by the Puno plant coming back with additional capacity, as well as the opening of large plants, such as the 48-megawatt McGinnis 3 project, which opened right at the end of 2018. Political uncertainty and natural disasters are two of the most imminent risks facing Ormat Technologies. A significant portion of the energy production is done outside of the U.S. and emerging markets. If a significant political event happens in a country where Ormat has invested heavily, it could adversely affect their long-term growth plans. Ormat's infrastructure is susceptible to natural disasters, such as earthquakes or volcanic eruptions like the one that we saw in Hawaii in 2018, which can halt energy production and hurt margins while the plants are down. Another risk to be concerned about with Ormat Technologies is that over 50% of their product segment's revenue is derived from Turkey. While this country has one of the highest forecasted demands for geothermal energy, it poses a large risk to the profitability in this area if an economic or political event disrupts contracts and/or financing of projects here. Moving on to discuss management, Isaac Angel has been the CEO at Ormat Technologies since 2014 and has held executive and board positions at a number of electronic engineering companies in the past. Doran Blacker has been the CFO and principal accounting officer for the past 6 years, having previously held positions as CFO and vice president of finance at a number of firms. In order to reach an intrinsic value for Ormat Technologies, an EV to EBITDA multiple was administered using a blended average multiple of 11.7 times, resulting in an intrinsic value of $60.76. A 2019 estimated PEG multiple was also calculated. Using the current price of $55.43 and a blended average multiple of 2.75, an intrinsic value of $65.52 was reached. A price-to-book model was also constructed, using a multiple of 2.42 times, and a value of $70.50 was reached. Now weighing these three models, 35, 35, 30, a price target of $65.35 was reached. And due to the increasing demand for energy from renewable resources, the unmatched advantages of geothermal plants, and Ormat Technologies' geographically and fundamentally diverse revenue streams, it is recommended that the company be added to the AIM Equity Fund with a price target of $65.35, representing a potential upside of 17.9%. Finally, I'd just like to offer a special thank you to Jess, Shay, Mr. Walker, Dr. Kraus, and Dr. Wall for working with me while I'm overseas. I can't say that I'm missing the Arctic cold in Milwaukee, but I do miss you all in Marquette. And with that, I'll open it up to questions.